Well, good afternoon, everyone. It's exactly 1:30 here on a magnificent winter's day in Notting Hill. A bright blue sky outside, a bit chilly, but a wonderful day. It's great to be here, folks. This is the last session. I'm going to try and finish off what I should have done last week in Module 3, and then I'm going to look at obviously answering any questions as best I can, and maybe adding a little bit on how to find some good shares for swing trading. So I think that that's the question that I've been asked most. So just remember that your success in this will be a function of largely finding the best horses, those shares with strong growth fundamentals, and secondly, working out whether the market is rising or falling. All right. If you get those two things right, then it's very, very difficult to go wrong in this line of work. The simplest signals will, in fact, work quite well for you. So let me make a start. And of course, I'm going to illustrate a couple of one setup, should I say, based on what the S&P 500 did last night. That's the S&P 500. Now, don't worry your little heads that that's an hourly chart, because whether it's an hourly chart or a daily chart or a monthly chart really doesn't matter that much. But this is where we were yesterday afternoon when I did my Q&A session. All of the measures on VectorVest were up, and I couldn't resist this beautiful spring pattern where, as you can see, the market couldn't get anywhere near that. And then all of a sudden, this shoulder, it came back to here, bounced off it. Okay, and that happened. That would have been what I call, Mr. Wyckoff calls, should I say, a sweet spot set up there, but I didn't take that one because that was too early in the morning. It happened pretty much in the Asian session in the morning. So that was what happened at 2 o'clock. The market dropped about 20 or 30 points, but it pretty much just dropped to the orders. And then all of a sudden, it in fact turned, and I bought it just there after that blue bar at 36.14. I bought it. And I let it run overnight and got out this morning at 31.60. So that's just a textbook example of Wyckoff at his very best. Trend is up. We had a nice move up here. All the VectorVest measurements were saying the trend is up. And then it pulled back to that level, up, came back to here, and then we have this absolutely textbook spring, and it sprung. So pretty much all of my intraday trading is based around sweet spots and springs. I would certainly have traded that as a sweet spot, okay, except that it happened in the middle of the night. So hello Kuldup, hello Dev, hello David and Ash and Yogesh, Ian, everyone. Great to see you all, folks. That was a sweet spot. It happened in the middle of the night. I didn't take it, but that coming back down again was just a classic spring formation. We're going to have a look at a few of those in the stock market in a few minutes. But nevertheless, that just makes a classic case for what I'm trying to teach. Hello, Simi, where the risk is lowest and the reward is highest. And that's what Mr. Wyckoff said so many years ago, that I want to place my entries at the extremes where the risk is least and the gain is high. And I've got 3 trading rules that I've gone through in the notes. But the first one is that the good trade is the hard trade. And as this thing kept flying down, I've been at this for years, that wasn't that easy to take because it came right down here and big bars. And I think the first was these little tails in these candles, and that's what candle analysts call tweezer bottoms. That's always a good sign. And then we got the blue candle, and then I thought that was okay, but still wasn't that easy to do. The second rule is that I want to fade, go against the short-term trend in the direction of the long-term trend. And the long-term trend is up. The short-term trend on VectorVest has been up since the election, 10 days ago, 2 weeks ago, I can't remember. And the trend on the hourly chart, I think, is up, nice thrust up. So I'm fading the short-term trend in the direction of the long-term trend. And rule number 3 is that I want to put my entries where the masses put their stops. And certainly during the course of yesterday, anybody who was long, who bought in just at the open, for example, had their stop under that low, and the market went down and nailed those guys as a cheap source of liquidity to get in. Now, what's going to happen now? Well, as you can see, it took out that high. It will have dragged in all of the breakout traders, and I think that it's probably going to pull back to here this afternoon before anything happens. So that's what invariably happens. The market breaks a high and then it'll pull back. So we'll see what happens at the open. We'll still be around here at the open, but I haven't got a position now. My stomach tells me that it's going to pull back a little bit. So I'm quite happy with that. David could go up, but my stomach tells me that that's too obvious. And maybe I've got old and cynical. In fact, I'm sure I've got old and cynical, Dev. But Mr. Gann said so many years ago, when it's that obvious, it's obviously wrong. So markets can get very tricky indeed. If you want to read something which is quite academic in markets, there's a wonderful book by a fellow called Victor Niedelhofer, and he's written a book called The Education of a Speculator. And he's a chap who was a billionaire out of markets, and he lost it twice. And he writes a wonderful book called Treachery in Charts. Okay, so a pullback, yeah, a pullback. Trying, you're quite right. That could be a pullback to the mean. That's for sure. So. See me just run. If a market runs too far, it's just gone a bit away from. It depends what moving average you want to use, but it's just stretched a little bit. It becomes overbought, and that will mean that the stochastic will be right in the 80 range and showing a little bit of divergence. But that's a particularly good example of a spring that I thought that I had to show. It's also a very good example of something else. It's a very good example of a falling wedge. Where is my trend line? Because if you look at this pattern, I'm not much good at this. To there, that's what technicians refer to as a falling wedge. And it's got 5 waves in it. Wave 1, 2, 3, 4, and 5. I think you'll find plenty of information on falling wedges on the internet, but a falling wedge is a very, very positive thing. And the old fellow who taught me this, he was a trader on the floor of the Merck. The floor traders used to call this bit the sweet spot. And they would be buying into that sweet spot just down there. And yesterday I saw the falling wedge, and I saw the spring setup, and I felt that was pretty much a sitter, and made good money in that. So I'll tell you exactly how many points. Yeah, 39 points in that. So yesterday was a good day for me, in fact. It was 39 on that overnight. And then 3 intraday trades. One I made 2 points. Where is that? One I made 20 points, and one I lost 7 points. So a good start for the week. Very good start for the week. But that's just me keeping myself busy in relatively small positions. But it illustrates something that's quite useful. The other market that I just want to look at as we start is the gold market. And the gold market is starting to look very interesting indeed. And I'm going to do a video on it a bit later. That's the gold market. I spoke about it yesterday. And from this particular low, it went, it's nearly at, bar the shouting, that 78% retracement. I wouldn't be at all surprised to see it come back and hit that exactly. But that is quite a strong turnaround. It's above 1800 again. So I'm reasonably happy that we're going to have a bottom in gold. I haven't bought anything yet. I was tempted to buy into polymetal this morning, but with preparation for this, I in fact didn't really get around to it. So that's, if we look at this on a 4-hour chart now, it's had a really strong move up. And you can see those tweezer bottoms again. Let's get rid of the volume. Volume doesn't mean a great deal. But it's still making falling tops here. As you can see, at the moment, that top is below that top. So what I've resolved to do, and I'm going to talk about this later, is a pullback to here. And I want to see the market make a first rising bottom before getting involved in it. Like so. So if I see a rising bottom, that was quite nice. That's the left. Hopefully this is the head. Hopefully that's the right shoulder. So I think that we'll probably see what technicians refer to as a neckline in this, something like this, I'm hoping. Okay. And then we'll see hopefully the gold market should move up strongly. I'm not discounting a pullback to that 78% retracement. That could easily happen before we turn. So I think it's time to, in fact, just sit and watch the gold market until it makes that rising bottom. I hope you found that helped. I know I've had lots of questions on what the gold market is doing. So if we look at the UK market, well, nothing much has changed since yesterday, but we've had a huge day up today. The FTSE's up over 100 ticks. Everything is up. The foot went off the petrol a little bit yesterday, but we've still got a buy-sell ratio of 3.8, an MTI of 1.5. Now, in terms of overheated stocks, when the MTI gets above 1.65, then that's a market, an entire market that looks very overheated. So it's still okay here. It's still okay. So that looks good. The American market, again, the foot came off the petrol yesterday, and the declines were more than the advances. But the MTI is still up, a very mega overbought situation. So the news flow in terms of the vaccine, etc., seems to be very good. And I'm certainly still holding long positions in the market, and we'll see how the open goes in a few minutes. All right, so markets are stretched, folks, and it's a time to watch stop losses very carefully on swing trades, on any types of trades. Any crack, in my opinion, will come from the US markets. They are, by any historical standard, trading at very, very high levels in terms of price to earnings ratios. And because they're very, very overbought, a bit of bad news could cause them to spring back. I don't think it'll be the end of the world, but nevertheless, they could spring back a little bit. Now, I've got a question here. Well, thank you, Cold Up. I'm a bit thick on all of that IT stuff. So uh, uh, that's what I see about the market. So let's go into our formal presentation. I need to go right to the end of this. Please bear with me. I think that of all the patterns, the most useful pattern is the cup and handle. So folks, if you go back to lecture 1, when is it safe to buy stocks? And the minimum qualification for a swing trade is that at least the primary wave on VectorVest is up. And just remember the sequence of the turn as I refer to it. 1, the primary wave turns up and we're in an up-down situation. Then we see a green light on the price column of the color guard, which means that the market's up day over day and week over week. That's better than the primary wave on its own. The third signal is a black star in the green light, telling us the price is up day over day and week over week, and momentum's also rising. So the chap in his car has got the foot on the petrol rather than having the foot on the brake. Number 4 is the DEW turns up. Number 5 is that the underlying trend turns up, i.e. the MTI is greater than 1. And then number 5 is that the underlying trend has been confirmed by 2 weeks price action. So we always must have the primary wave moving up for a swing trade. Now, if the primary wave turns to up and all the other measures of the trend are up, then that's even better. But the minimum qualification is that the primary wave is turned up. That little pointer is telling you that it's safe to buy stocks. And I know it's boring. I know you've heard it so many times before. Because you've heard it so many times before doesn't make it any less important. 70% of your ability to make money will be following that. Okay. And if the sentiment is good, then emotionally you're going to find the journey quite easy. If the general market is selling off, i.e. we're in a down situation and you're trying to pick bottoms, my word, top and bottom pickers become cotton pickers very quickly. So what to buy? And this is really, really important. And we want to look at shares that are trending. We want to look at shares that have got really, really good fundamentals. And for this type of work, I'm looking at growth fundamentals. And those growth fundamentals will be, in fact, summarized by relative value and GRT. If you want to add safety, that's great. I think that if you've got an RS of greater than 1, that'll be adequate. Remember, in our worry-free methodology, we look for RS to be greater than 1.3 odd. But and once you've got those two things in line, then you've got to try and find an entry. And I've suggested that confluences of previous resistance that become support and Fibonacci levels are great places to look for entries, especially if the stochastic is less than 20, especially if the stochastic is showing reverse divergence. I've done my best a second ago to illustrate the Wyckoff techniques, and I'm going to try and do that a little bit later. Now, in terms of what to buy, I've suggested a search, and I have to apologize. It took forever to get the damn searches on there. There was a major problem, and that problem was sorted out. So I hope that you've all got them now. Yes, David, I am. Yes, David, I am. Okay. David says, are you saying that the VectorVest traffic light is green? You will not even look at swing trading shares? David, you can if you wish, but your hit rate's not going to be as good if at least the primary wave is not turning up. Okay, and if the primary wave turns up and the DEW is up, then that's much, much better, and you're putting the trend at your back. If the market is falling, overall market is falling, then obviously there are going to be shares that outperform the overall market, that's for sure. But your ability to predict those shares is going to go down in terms of hit rate. And David, it is my experience that when you do something that's counterintuitive, that doesn't make any sense, then all it does is reinforce the belief that I'm no bloody good at this. Okay, so you've got to be very careful as well as your loot. There's two types of capital, sir. One is your loot, and two is your emotional capital. Okay, and I assure you that if you actually flaunt the rules, you can flush that emotional capital away and put yourself into a very dark place indeed. The VectorVest prescription is without a doubt a conservative prescription because we want you to consistently make money. As a swing trader, you don't need to take that many trades, David. If you take 3 to 5 good trades a month, you're great. And then if you want any more than that, you can always look at the S&P or whatever. But trading intraday is not for the faint-hearted. I'm not saying for a second that you can't master it. I can master it, so anybody can master it, but it's not easy. It took me years to become consistent intraday, and that's no exaggeration. Everybody will tell you the same thing. So didn't mean a very good question, David. So, and then what to sell now? For many of you, you're quite happy to take off half when you've made as much as you've risked, and then let the other half run and pull the stop loss up behind you. If you listened yesterday, that's what Susan Thornborough does. Or you may want to get out at a Fibonacci level. Okay, so let's do a little bit of revision on Fibonacci. Where will I go? Let me just go to the Dow again. Okay. So this market fell from here to here. So all I do, folks, is that I get the fib, click on that high, pull back to that low, and that will in fact work out where the 1.618 target is. Up there, it's 3690. And it's just exactly the same on every share. So take that level minus that level, multiply by 1.618. If you want a Fibonacci target, that's where you should be looking. If we go to VectorVest UK and we look at the stock viewer and we look at Games Workshop and off a bit this morning, I believe, but it's had a good run. Let's see. There's Games Workshop, folks. And if, for example, let's get rid of all of this, We had a pullback here, and to work out where it's going to go to, you've just simply done that. And that was the 1.618 extension at 98. The darn thing went a little bit more, and I assure you, folks, that it doesn't matter how hard you try, all trades end badly. So just cut yourself a little bit of slack. You would have got into this and somewhere down here. See the little spring here? Up, down, up and down. That's a classic little spring. You would have got in there at 60 and you would have sold out at 98. You would have thought you were a genius. And then the little sod goes further. Okay, that frequently happens, but you'll find that markets go to that 1.618 extension. Now, where's this going to go to now? You take that high minus that low, multiply by 1.618, and that's the target somewhere up around here. Wouldn't that be great before Christmas? I bought a few of those first thing yesterday morning, and they're marginally in the money. I wouldn't be at all surprised to see it pull back a little bit today. So that's Fibonacci, folks. And that's a Fibonacci extension. And If we go back a little bit, this would have been a Fibonacci retracement from that low to that high. And as you can see, ladies and gentlemen, it stops at the 78% retracement over and over again. Can you see how the 78 and this old high sit on top of each other? You don't have to be John Wayne and buy this level. You can wait. And those of you that attended the Q&As will know that I waited until the DEW turned up just there. Okay. And that was my entry into that, and it didn't. I ran it, and I'm still in it, and I added to it here. I like this. Guess what? I liked this. That's a fib level, and I like this pull back to the old high, and I thought that's a sweet spot. So I'm following my own prescription and have been for a very long time. So that's a revision now. You're going to say to yourself, what do? Do I let them run, or do I get out at a 1.618 extension? I have not got an answer for that, folks. I haven't. But if you are a swing trader, and especially if you've got leverage with a spread bet or something, then I think you should get out at the 1.618 extension at least. All right. If you're buying the share and you've got it without any leverage, then by all means, take a little bit off, get your stop to entry, and just let the other half run. As long as this doesn't go red, then you hold the damn thing. Does that make any sense out there, or am I talking to myself? Oh, my word, we've got a full room. Thank you all, guys, for coming. We've got everybody's here. All right. I don't mean to be dogmatic, but I have to, in fact, let you know that exits, there are no real answers to exits apart from a definition of what you want to do. My advice is that if you're leveraged, you want to get out and sell into strength. If you're not leveraged, then you can let the thing run looking for what I call a runner. Okay. Hello, Mark. Yeah, let's. Do you mean now, Mark? It would have to break the last swing high, which would be here, for a plotter trade. So we'll put on the MACD in a moment, but the last swing trade was there. So market would have to break that swing high level. Let's put on the MACD, add parameter, technical analysis, MACD, and let's go. MACD hasn't crossed yet, but if that MACD crosses, Mark, and it breaks that swing high, that would be a plotter trade, certainly, yeah. Okay, that was a short on the plotter, just here. See, there's the swing low, and the MACD was heading down, so you could have shorted it there if you wished. Don't like to short stocks when the general market is rising, and this was the Pfizer announcement, but that would be a plotter trade. There's no doubt that the plotter gets you in a little bit late, but my word, it works. It really works. That would have been a plotter trade just here, I think, as this broke up. Didn't go that far, but broke up. Let's have a look. Any more of them? Yeah, in here, that was a beautiful plotter trade just there. And there would have been another one here. And then all of a sudden, as it started to go up quite slowly, the MACD was heading back down again. So I hope that helps. I hope that helps. The plotter trade is called the plotter because it's relatively unsophisticated compared to the other techniques that I've, in fact, spoken about. Okay, so if I go back to my PowerPoint presentation, and I'm running late as always. Matthew says, is the target from the plotter trade the same? Market, by all means, if you get a pullback, you extend the pullback and look for a target. No, Neil, the MACD doesn't have to be positive it just has to be above its signal line. Yes, of course, you can take many, many plotters see me on the way up. Many, many on the way up if you missed the first one. All right. So it's a very unsophisticated technique, but my word, it works reasonably well. It's late. I think you can do much better than that. And especially with my Wyckoff techniques, if you've got the testicular fortitude to put those techniques into practice, you're going to be getting in at the cusp of the turn. So the trade plan. And I've gone through this with you before. Each trade that can place can do 5 things. Break even, small win. In other words, you get the first lot off. You've made as much as you've risked. You've got a small loss, 1%. You've got a big win, or you've got a big loss. And your job, folks, is to avoid number 5. That's what the business is all about. Now, in that Quidel share that I was in a couple of weeks ago, that got a hiding when the Pfizer announcement came out. My theoretical stop loss was cash stop loss was 1% of my account. As you know, the darn thing gapped against me. The brokers were closed. You couldn't get through to the rascals. So I got out hours later with a 2.5% loss. It's painful for a moment, but it's not the end of the world. Okay, so most big losses occur because people's ego just do not want to take the loss. And that's largely because you haven't accepted the risk. Now, I've never, in recent years, put a bet on a horse. Although I've owned racehorses in South Africa, I had half a dozen of the buggers on the track. I was a lot younger, a lot more aggressive. I had my own colours. That was the run up to 2000, where, man, we printed money. And but I've never actually put a bet on a horse in living memory. But if you go to the bookie and you want to put a $5 on a horse, if they'll ever take you, North American people, a $5 is £5. If you want to put a $5 on a horse, the little girl behind the place, she takes your $5. Okay, that $5 is gone. Okay, and you have to accept the risk. But very, very few financial traders, especially retail traders, actually accept the risk. And they just keep sitting and sitting and sitting. So just remember that you need to accept the risk. Anthony, there's no doubt that if you've got a small account, there are going to be shares that you can't trade. For example, Amazon, if you've got a small account. Simple as that. Okay, simple as that. There are brokers around where you can trade, Anthony, at 10 pence a point as opposed to the IG £1 a point. But there are not. There's lots and lots of shares, good quality shares, Anthony, that you can trade with a relatively small account. So I wouldn't worry about it overly. John from Naisna, I hope the weather's taken up for you, John. If I'm trading 3 setups across shares and commodities, no, John, I don't think so. We're talking about short-term trades here. I think you can just keep taking the trades. Take the VectorVest stop loss, Simi, to start with, okay? I won't translate that, John. Take the VectorVest and size your positions based on the VectorVest stop loss, okay? But there's no doubt that if you have a relatively small spread betting account at £1 a point, that's the minimum bet size as far as I know, then there will be shares that you just can't afford to trade. So that's just the way it is. So Uh, and I've gone through this with you before. The other thing that you have to be very careful about is differentiating between the process and luck. And on many occasions, my biggest trades were a function of luck. I remember my very most profitable trade, one of the ones happened that stand out, happened in 1999. And I was long the copper market, and I was on a trip to London for the summer for a couple of months, living in South Africa at the time. And I assumed that I'd been stopped out of the copper trade. So I went to London. I was going to get out of it, but I just assumed that I was stopped out of the copper trade. So I'm in London and I'm here for 3 or 4 weeks, and the broker asked me out to lunch. So I was wondering about that, but he asked me out to lunch. So I went and met him at lunch, and he says, "That's a great copper trade you've got running." And what happened is that I had missed the stop loss by 1 tick. So the position was still running, and I'd forgotten about it, and it exploded up the page. So that was a function of luck more than any form of my process. We'll be very careful to differentiate in your notes between the process and a lucky outcome. If I have time, see me, if I have time. I'm running late again. I'm not trying to say you're going to get rich quick at this, folks. I promote trading as a worthy endeavor. And it must be approached. It takes hard work and study to reach one's potential as a trader, that's for sure. And obstacles are always there. And I'll paraphrase Winston Churchill when he used to say, well, he did say, that life's just one damn thing after another. So there is the obstacle is there's a chap called Ryan Holiday. He's written some really good books, and he's written a book called The Obstacle is the Way. Okay, very good read if you ever get it. So those are my 3 rules. The good trade is the hard trade. Fade the short-term trend in the direction of the longer-term trend, and place your entries where the dumb money places their stops. The dumb money had their stops under that low that I pointed out yesterday, and the market went down and nailed them. Simple as that. So let's look at how much money's in your account. I know I've gone through this. This, without a doubt, is the #1 reason that people go broke in this business. They don't want to give IG all their money because they're scared that IG is going to go broke. So they put in a small account and they trade it far, far too much in any one trade. And they run the account down. Before they can trade again, they've got to put more money in. So I think you need to decide how much money you want to capitalize your short-term trading business with. And then vow in front of your God never to lose any more than 1% on any single trade. There are going to be gaps, but they don't happen that often. I've had a couple of them. What was it? Quidel in the US, and of course bloody plus 500 as well in the UK that I can remember about in the last year or 18 months. But it doesn't happen that often. And you need to size your positions correctly. I've gone through this so many times. I think that the risk per share is simply the purchase price minus the stop price. To start with, use the VectorVest stop. Sometimes it doesn't make sense because it's too close, as Clive found out the other day. I think it was Clive. It's too close. And of course, sometimes the VectorVest stop loss goes down, which used to freak me out when I started. But nevertheless, it does keep you in winning positions. So the very simple is that the number of shares you buy times the risk per share, which is simply the purchase price minus the stop loss, must equal 1% of your account size. And there you can work out the number of shares that you want to buy. Okay, and I've gone through that 1,000 times, folks, and no doubt I'll go through it 1,000 times again. That's all it is. Clearly, the share should be in an existing uptrend. The comfort index finds those easily. Jerry's gems, which you should finally have got, find those easy. And that's a really good search for finding candidates for swing trading. Market timing, okay, 70% of the exercise. Once you've got all that in place, you need some form of little trigger. And the candles patterns make a good job of that. Some people use a candle plus a close above an 8 EMA to confirm the reversal. Those are pretty much all the candle patterns that I use. Engulfing, hammers, haramis, that inside bar. Piercing line is pretty much an engulfing that doesn't quite make it, and then the old doji. Okay, I always like to see a confirmation bar on the doji, so I like to see a nice plus bar on the doji, and that's in place, in fact, on the gold market on a 4-hour chart at the minute. So those are patterns, and I think that those are readily available on the internet. There's a great site called candlestick.com that's got a great deal of stuff on candle patterns for Mahala, which is Zulu for free, and clearly VectorVest have got a course on candlestick patterns that you can purchase, quite an expensive course. Just use those. So to manage the trade, split your position into 2 bits. Sell half when you've made as much as you've risked. Now, that simply means that if you buy a share at £10 and the stop loss is £8.50, your risk per share is £1.50. If the share moves to £11.50, you've made as much as you've risked. Sell half, bring the stop to entry. And now you've got the ability to make money at no risk. And I've gone through that, okay? And I've explained how to use fib targets to work out targets. Many of you will be more than happy to just let the remaining half run and use the VectorVest trailing stop loss as a stop loss. In other words, when you put the screen up, that there's no red above in the buy, sell, and hold line. All trades end badly, folks. Simple as that. If you get out of the target, the damn thing will keep going. If you don't get out of the target, it'll pull back. That's just the way it is. Always been the same. Cut yourself a little bit of slack. And that's a random thing, and it's really, really difficult to get your mind around randomness. It's not your fault. Take a deep breath, roll with the punches. And this is not difficult, but and I think that everything I put across, I believe, is quite simple. And you really need to build a habit to be able to put this into practice over and over and over again. And if you want a really good book on building habits, it's called Atomic Habits by James Clear. A really good book. Anybody read it? Atomic Habits by a fellow called James Clear. A really good book, a practical book, a hands-on book for building really good habits in life. As you know, I read far too darn much. Okay. Now, how to ingrain this into your subconscious, how to build that habit, how to build the discipline to follow a simple system. Got a question here. Emotions in check, David. What does that mean, cooled up? I'm not quite sure what you mean by that. I'm not quite sure what you mean by that at all, sir. So I'm still not sure what you mean, Kuldup. Well, I think that I'm going to talk about emotions in a second. Emotions are your body's reaction to a trade, to a thought. And there is a trading psychologist out there whose name I've forgotten. It'll come to me in a second. It's an age thing, I think. And she says that it's impossible to make decisions without emotion. No, it's not Van Thorpe. And those people who haven't got emotion, the part of their brain that in fact causes emotion, those people can't work out whether they want their coffee black or white. So we need to get really, really excited about what we do in a different way. And if you bear with me a couple of minutes, I will in fact talk about that. I get really, really excited myself about talking about markets. Hopefully I put that across. I've been doing this every day since 1988 full time. One of the biggest problems that I have in teaching this is that people jump from one system to another system over and over and over again. Many traders change systems after one losing trade. And having the discipline to stick to the one trading plan through thick and thin is quite a business for most people. So I've gone through this in the notes, but I firmly believe that discipline can be built, that one person, it does seem that one person's got it and another person hasn't. But nevertheless, I firmly believe that anybody can, in fact, build discipline. Now, I'm 65, and the only thing that I'm really looking forward to at the minute is the gyms open tomorrow. Can you believe it? Okay. I'm not particularly worried about the pubs, but I'm more worried that the gym is going to open tomorrow. And I assure you, I don't need to grit my teeth to go to the gym twice a day, 6:30 and 7:30 at night. In fact, I've got to exercise discipline not to go, and I'm not trying to be there's a South African expression that came to mind there, which I'll spare your tender sensibilities. But I don't need to grit my teeth to go to the gym every day. And that was not always the case. No, I wasn't, Julie. The name of the psychologist will come to me in a second. I've forgotten at the moment. Denise Schull, a lady called Denise Schull. She writes very well in markets. And how emotions need to be focused, but focused in a positive way. Without that emotion, you actually can't make any decisions at all. So I've done this with so many people over the last, this is an old slide, it's closer to 25 years than 15 years. And I've had a huge success with it, mostly at the institutional level. And I actually built quite a reputation in being able to turn institutional traders that had been really good and lost it around. And it involved sitting with people to make quite a few trades, not to teach them anything about markets, but basically to sit there and be a policeman to make sure that they stuck to their trading system. I don't do it anymore because it became quite painful. But it was incredibly lucrative for a long time. And I used to sit with traders and supervise the process. And myself and one guy had a huge fight one day, okay? I was much tougher in those days, and I used to box nearly professionally. So he came out the wrong end of it. So I decided not to bother with that anymore. So here's what I want you to do, folks. And this has not failed. I want you to decide upon a trading system which details entry, exit, position sizing. It should be simple and straightforward, as we're in this place, we're in a discipline building exercise rather than a system building exercise. So the stochastic system, the plotter, or the Wyckoff spring could be used. Yes, John, I've read that. Very good. Very good indeed. Ash says, should he start with buying shares or spread betting? Buying shares, Ash, with no leverage until you get the hang of it. The plotter doesn't use the stochastic at all. It uses the MACD CME. So one of the systems that we've talked about, and then the next thing is to resolve to follow the system for a batch of trades without changing the rules. 30 would be a good number. This can be difficult, as your mind wants to be right at all costs, and you find yourself chopping and changing the rules. And that's why that chap and I had a fight. After 2 bad trades, he wouldn't take the third. I told him he had to take the third. He wouldn't take the third, and he swung at me, and I swung back. And rule number 1 is that they must never get up. So after 2 bad trades, he wanted to change desperately. And this led to my exit from the mentoring business. It's a very difficult exercise. Yeah, Keith, your pro trader should be up and running. No, Paul. You need to, if you want to follow this, you need to find one system and follow that system, not 2 or 3. See, the stochastic system was explained in lesson number 2 or 3. It's a pullback to a stochastic less than 20 in a share that's trending upwards with good fundamentals. You're going to have to go through the notes again to have a look at that, I'm afraid. Keith, I'll answer that. Just has to cross, Mark. And that's just has to cross. Adding to winners, Ain. Adding to winners. That's what pyramiding means. Adding to winners. So, and it's a process similar to the personal trainers we see in gyms these days. And personal trainers might think that they're in the exercise business, but they're not. They're in the discipline building exercise. Really, if they're in fact coaching Manchester United, then maybe they're in the exercise business. But if they're coaching somebody like me or somebody of my age, then clearly they are basically in the business of getting the guy there. And they tell you that, you know, their exercises have been optimized for your body type. That's just rubbish. You see them scratching them out in a car park. So personal trainers are in the discipline building business, and God bless them, they haven't got the wit to work that out. Now, the most amazing thing about this exercise is that the resistance goes away, and I've seen this so many times, somewhere between 10 and 15 trades. So folks, you're 10 to 15 trades away from the trader you want to be. It's that close. After 10 to 15 trades, all the resistance has been melted away. In exactly the same way as if you grit your teeth and go to the gym for 15 days in a row, you'll have melted away a great deal of the resistance about going to the gym at all. So you build habits very quickly and easily, And I personally build habits very easily. And you may think that that's good, but you can also build a bad habit very easily. So when I go into Pret, I'm very careful not to have any of those little Pret bars and things that they've got there, because I know that if I have one Pret bar or two Pret bars in a couple of days, I could easily have build a habit to have one every day. And I certainly don't want to do that. So 10 to 15 trades. Now, most people do it between 8 and 13. Somewhere between 8 and 13 trades. The resistance to just simply trading over and over and over. And somebody mentioned Van Tharp a few minutes ago. One of Van Tharp's favorite slogans is that traders just trade. You just keep taking the trades according to your own particular little system. Now, after you've developed the discipline, then by all means you can go back and change the system. By all means, you could run 2 or 3 different systems, looking for the stochastic system, looking for sweet spots, looking for plotter trades. You can run them all together. But I suggest very strongly that to get this going, the most important barrier against you being successful in this business is jumping from one system to another system. Has anybody found themselves doing that in the past? Okay, jumping. Now, we've got to fix that. We've got to fix that, folks. And if you don't fix it, you're going to find yourself on courses for the rest of your days. You'll guess under UniSearch, it should be short-term trading success UK. The searches should be there. So there's only one way to, in fact, build that discipline, and that's to, in fact, grit your teeth, pick a system, grit your teeth, and practice it. The closest thing to a CAN system would be following Jerry's Gems. That would be a good place, and it's there for you. Yeah, Jerry's Jewels, Jerry's Jewels, not Jerry's Gems. I thought they changed it to Jerry's Gems because I told them what what a lot of people would think about jewels in the UK, and he went bright red. So I think they changed it to gems along the way. So that is what I would like you to do, folks. All right, that's what I would like you to do. So I now want to do a little bit on, and I've got running close to time here. If we look at, clear that. Yes, Keith, I won't. Your Pro Trader, Keith, should be running, and you should see all the pro trading searches. If I go to UniSearch, and if we go down, the Pro Trader searches should be here somewhere. There's the short-term trading course searches. Okay. The Swingers and Jerry's Jewels. And there's the Pro Trader searches there, Keith. You should see those. I know your query was that you couldn't read the book. And that's the Pro Trader searches there. And that will allow you to write searches with the stochastic, for example, in it. Yeah, Mark, Jerry's Jewels will come out. Last week it didn't come up with anything. Okay, that's because it's quite a it's quite a stringent set of criteria. Some days it doesn't have any. We have one guy up in Scotland who just follows Jerry's Jewels, and he gets his 3 to 5 trades a month out of it. So that could be a good place to find your 30 trades. The rest of the stuff is yes. There is an American search that you'll have to write that search in. See me. You'll have to write it in. Support will be able to do that for you. Okay. If you give them a call, they'll arrange a team viewer session, and they'll write that in. But Mark, frequently Jerry's Jewels won't give you anything at all because the shares got to pull back, and if nothing is pulled back, and the GB group is one share. Thank you, Dev. Thank you. And that could be a great trade. I think it's also a spring as well. From I looked very, very quickly this morning. Now, so if you look at the short term, we've got these two in here, and that's my FTSE search. That's Jerry's Jewels, which won the GB group today. We'll look at that in a second. But another very good place to look for swing trades is under Watch List Viewer and Midas Touch Stocks. And this finds stocks that are in the throes of very strong fundamentals. Now, I did an essay on this in the UK last month. Yeah, I think it should be running, Keith. What I'm trying to sort out is that manual for you that you couldn't read. Now, you need to do those on your own. I'm more than happy to help as much as I can, but you just need to do those 15 trades with the same system to build the discipline. Now, the Midas Touch, if I want to look at watches of Switzerland. There's watches of Switzerland. I'm going to use this as an example. There's the chart. There's earnings per share. That looks good to me. Now, if I put on the Midas Touch watch list, and like so, Midas Touch criteria, the green line is a 65-day moving, is a 10-day moving average of the VectorVest stop. The red line is a 65-day moving average of the VectorVest stop. And this is the RT40, which is the 40-day moving average of the RT. This finds shares that are in the throes of a very strong trend. And if you go to views, I've got an essay on it last week in the UK market with a video. So if you click on the essay viewer and go down here, I put a video together on this, and it's down here. It's on the end of the thing somewhere. Yeah. Click here to see the video. You could also go to special reports and download the amazing Midas Touch book. There you go. So if we go back to viewers, these are shares that are in the throes of a strong trend, but the Midas Touch doesn't have any fundamentals, folks. But it's a great place to look for trending shares. As you can see, you still got to eyeball them here. And look at the growth, relative value 1.47, relative growth rate 24%. MPAC exactly the same. Sumo looks very good. I'm ignoring the trusts. Don't like the look of Jet2, 0.29. Bloomsbury looks good. So let's look at those. Now, if I chart those, if I go back to 3 months, the characteristic of getting into this thing is that and that must be making 3 month highs. And it's been there, it's been in this watch list for quite a long time. So if I put on the price, and I'm just going to get rid of the Midas Touch watch list. So untick that, untick that, untick that, and go to a year. There's the chart. And it's been in this watch list for a long time. If I were to put on the stochastic, yeah, so much stuff on here now. This thing is rising. It's well above the 21 and the 55. And we have a situation where this rose and that fell down to so. I think that was a spring at 4, just there. Bring this back to 6 months. You can see how this gapped. So that could easily be, that was a rocket launcher gap. You had to sweat a little bit before it went into money, but this was the spring as it went through here, like so. And it went from 4 to 493. It looks as if it wants to go quite a bit further here. So I think that the Midas Touch watch list, I had lots more here. View stock graph. That looked very good to me indeed for more. This is MPAC. And MPAC has broken those highs. Stochastic is not saying anything. This has been on the Midas Touch watch list for quite a long time. And certainly you could have bought it as it broke up at £4 here. It does not talking to me at all. But this one, the Sumo Group, it pulled back. And as you can see, nearly a spring here. This looks as if it wants to go. So you can find lots and lots of really good shares in the Midas Touch watch list. So I suggest that you look at the Midas Touch watch list for opportunity. You also look at my DEW FT 350 swingers for opportunity. And then, of course, you can simply look at the top 20 or 30 by VST for opportunity. Okay, so the Midas Touch is got no fundamentals in it at all, so you actually need to filter out here. Look for high RVs, look for high GRTs. If we go down, Bloomsbury, did I have Bloomsbury up a second ago? I think I did. That's Bloomsbury, and that was the situation in Bloomsbury just here. I think I had that open a moment. That's Watches of Switzerland. Did I have Bloomsbury up? Yeah, Bloomsbury starting to look very good for me as a spring. And there is the top, that's the shoulder, came back once, up to there, back down to here, 240, somewhere in here, and this looks to me as if this can go, folks. So that's a good example of a current setup in Bloomsbury. So in Bloomsbury, that looks as if that's a swing trade. You would buy it now at 262. Stop loss, where's the VectorVest stop loss? 232, okay, but 11%, 12%. The GB group that we saw a moment ago from Jerry's Jewels, where did that go to now? Unisearch. The GB group, I'm a shareholder in the GB group. Let's look at the fundamentals on this. Growth rate 17%, that's good. RV on the low side at 1.12. RS, awesome. It's a worry-free share. I bought it right back when we were worrying. And as you can see, there's the stochastic right down in the 20 area. And that's just a classic spring here. And there's the stop loss. That's a spring. This looks as if it can go. So that's two setups out, two spring setups. And so, as Mark says, Jerry's Jewels doesn't give you that many setups. That was a sweet spot, and it didn't work. It pulled back. you should have probably got half off. You would have been stopped out at entry. And now you can look to re-enter again. Yeah, Ash, it is overvalued, but remember, we on VectorVest, but remember, we are swing trading and we're looking for trades over a few days. So as long as the growth fundamentals are there, then I think we should be fine. Okay. I'm holding it. I've been holding it since 6. Went as high as 9, and now it seems to want to go again. Okay, the GB group. So that is somewhere to find some really, really cool swing trades. And exactly the same thing happens in the US market. If we look at the US market here and go to viewers and then go to watch list viewer and cherry picking. And there's 2 in here. There's hot stock picks as well. I don't know anything about that. And there we are. These are shares in the US that are trending very strongly. Remember, although they're trending very strongly, we don't simply buy the darn things. We want to look for an entry. So they're not setups, but they're trending strongly. And that's MFAS Energy. I'm sure many of you have looked at this. It's been trending strongly for a very long time. We add our friend the stochastic here. Down around here somewhere. The stochastic didn't get down that far. My word, these shares just don't want to pull back at all. Very strong, especially with the sometimes when you've got a very strong share like this, that is what I would call probably a spring here, up, one back to there. Clearly it's what I call a fast trend. The previous high was here and that low was there. That's about the only time a breakout works, just like that. So it's been in this for quite a while. Let's look to see if we can look at that. Wow, Moderna. Yep, that would have been a fast trend just here at 360 and still going. So the Midas Touch watch list can find and be an exceptionally good way of finding shares that are trending strongly. I think you need to eyeball the RV and the growth rate. Okay, so your next objective, folks, let's just look at the American market and see how it's opened. And it's opened 40 ticks up at 3661, so the overnight market got it correct. Advances, twice that of declines. Go to viewers and we look at watch list. Where do we get the watch list now? Watch list viewer. And AMD off a little bit, had a good day. Rocco's off a bit, so my portfolio not doing great here. Snap is up, and finally Ingersoll Rand is in the money. All right, so still early going, still early days. So I've been a little bit weak on this because of the market being in this mega overbought situation. As you can see, the MTI now back to 1.67, the buy-sell ratio over 5 again. So I've just been careful here. So Jerry's Gems can find us some good trading opportunities. As Mark says, not that many. One of them today. That looks like a good one, Mark. If you get another 3 like that, or 4 like that a month, you can have a really good month as a swing trader. You have to wait on them. That's a great place to find them. A really great place to find them, and it does all the work for you. So you could easily say that I'm going to try and get 15 to 20 trades in without changing anything, just by applying Jerry's gems. Then make sure that you look at the top stock viewer, at the top few shares by just by VST. That's a good place to look at them. I always look at 20 or 30 of those. An awful lot of investment trusts in that at the moment. I'm afraid, rather than shares themselves. But this impact looks good. Sumo looks really good. Volex is still going off a bit yesterday. And Sylvania Platinum still going strongly. Let's just look at that. And as you can see, it came back to the old top. And then it traded, what's that, a hammer? Certainly an outside day as well. So a break above this level would be quite good. So that's a sweet spot in Sylvania Platinum. That could be the only thing that you do, and if that's the case, you'd be a very successful trader. A pullback to very strong old tops like that. That could easily and is a flag type pattern. So the next target you would take, let's put on value. And where am I now? Capital appreciation, value. And we would simply take, look at the value on that one, and we would simply take a fib between that high and that low. And there's the 1.618 up here. That is at a level, wrong one. That was at a level of 87 from here. 86, 87. This share's got a pound written all over it, I think, if the platinum price can start to move. But that's just a great example how this pulled back to that last old high. That's what they do all the time. And all the orders were sitting down here waiting for it. Mark, you're not trading 1% of your account. 1% is the risk, the difference between the entry point and the stop loss. So on this particular trade, the entry point's at 76. The stop loss is at 67. So you're risking, what's that, 9 pence on that particular trade. So if the share falls from 76 to 67, you're going to lose 1% of your account. Then you size the position. Okay, and clearly there's a bit of work to be done here. If you size the position, and let's see if I can do it. So entry, stupid thing. Entry point is what we said, 76. The stop is 67. Why it changes, I don't know. So therefore the risk per share is, what is that, 9 pence. 0.09 pounds. So if you've got, let's say, £20,000 in your account, okay, well, 1% of that is 200 quid. You okay with that? So the equation is quite simple. The number of shares you buy times the risk per share must equal 1% of your account size. And that means that the number of shares that you buy is 1% of your account size, which is 200, divided by 0.09. Can somebody clever please tell me how many shares you would buy now? We do that calculation. Okay. Oh, thanks, man. Oh, thanks, Dash. 2,200 shares. So it's 2,222 shares. And you're going to buy those darn things at 76 pence each, 0.76 pounds each. And that equals to an exposure of what, Yogesh, or could you work that out for me? What's 2,222 times, so yeah, 1688, I think. You got the decimal place in the wrong place, something like 1688 pounds. So Mark, your risk, your exposure is out of your £20,000, you're spending 1688. Okay. If the whole thing falls apart, you're going to risk 200. That's the 1%. Does that make sense? That's correct, Mark. That is correct, yeah. And you just keep playing the game over and over again. So if this share goes to £1, you would make, you've got 2,200 shares and you're going to make 25p, you would make £500. Your account would now be 20,500. No worries, Yogesh. Paul, I at the end of every month, if my account is appreciated, then 1%'s more money. Okay, 1% is more money. So let's say that I've made £3,000 in the month. I've now got £23,000 in my account. 1% is now £230. Yes, of course, Paul. The risk rises. The risk rises. The risk would now be £230. That's still 1% of your bigger account. That's how you grow an account. Yeah, it's very easy, Mark. Nothing to it. But I think you missed the point. You thought that we were only going to buy 1% of your account size in terms of shares. That's not the case at all. 1% is in fact, maximum loss that you could take. You could push that up to 2% if you want, especially with a small account. But I'd be happier if you kept it at 1%. And that means that if you've got 3 bad ones in a row, you're only going to lose 3%. All right. You got it. Okay, well, that's good. You got it. No problem in that. So that was good. We did that example. All right, folks, it's 2:54, and let me show you that method of and we go now to the S&P. Oh, David, what have I done? Have I got rid of it? What did the S? I must have right-clicked and got rid of the damn thing. So let's go to viewers. That's a pain in the backside. S&P 500, SPX. That's it. That's going to be painful. I don't know how to put that back. So there's the SPX. It's up 41 ticks. We look at it over 3 months and get rid of the stochastic. This doesn't use the stochastic at all. All right, so here's what you do. Keith, are you listening? Pleasure, Ian. Yeah, Mark. No, I've been using the spread betting platform since 1983, and you can get that relatively easily. I don't see that's a problem. So here's what you do. All right. The American market closes at 9 o'clock at night, right? Our time, 4 o'clock their time. Calm yourself, Simi. Calm yourself. Take it easy. So it doesn't work every day, but it works well most of the time. It worked well today. So at 5 to 9, Keith, with the smallest bet size that you can, pound a point, you buy the close, right? So last night, the market closed at 3621. And I bought it at 3621. Now, IG and your spread betting companies will make a market at night based on what the futures market do. So the next morning, the next afternoon, London time, but the next morning, New York time, at about 2 o'clock, you sell it. That's it. I've got a new notebook. So I've got last week on this, I made 54 points just doing that. And this week so far, I lost over the weekend. This week so far, I'm up 32 points doing that. You can see here, you buy there, okay, and you get out there. You buy there, you get out there. You buy there, you get out there. You bought there, and the next day you got out, you made a tiny loss. You buy there, and that was the Pfizer one. That was a great one, okay? Now, you may wish to put an exit order when you've made 20 points. That would be fine as well. You just need to, but you'll be amazed how well that works. Some people have got put on an 8-period moving average to it, and they say that they only buy the market when the market's above an 8-period moving average. I buy it. I just do it every day. Okay. You don't, Paul. It's just an edge in markets. No, I don't put a stop loss, Dev. I traded it a few pounds a point. That's all. I've never shown this to anybody else before, David. And if I find it on the internet, ladies and gentlemen, you're going to have one very pissed off Royal Marine in your hands. Yeah, Mark, in every market. You don't know it's going to go up, Paul. It's just an edge in markets that works over the years. Always buy, Keith. And Keith, over the years, I've tried to optimize it. Yeah, it's just something that I tripped across over the years. You need to sell it and of course, Simi says you need to sell it at 9 o'clock. Folks, I've tested every little bit of this. And some days you sell at 9 o'clock, of course, there. Let's see, there on that day, where my line, you sell as the market opens. Market opens at 2:30 our time, that's 9:30 American time. And sometimes you get out there and then it just shoots up the page and you kick the dog. But and clearly you can try and optimize it. I've tried that a million times, but and clearly this afternoon you got out at the open. The open was, I don't know what the open was. Let's see, how do you do this now? The open, stupid thing. Sometimes it works there and sometimes it doesn't. I don't know what the open was, but I got out, I'll tell you now, if I can get my notebook to the right page. Yeah, I made 39 points, so I got out slightly at 60 odd. And I got out of this early today because I knew that I would be here. So that is, it opened here at 47, it says. Just remember, there's a difference between this market, this is the cash market, and the market you'll be trading. About 2 o'clock, Richard. About 2 o'clock would seem to be optimal. David, you can put a fail-safe stop loss in as you want, but the reason that I call it a beer money trade is that I don't use a stop loss. I think you could use it on the Dow as well, Richard. Although I've got no experience of that. Pinnacle, no. You can put a fail-safe stop loss in there of 50 points if you want. All right. Yeah, buy about 5 to 9, Mark. That's right, 5 to 9. Yeah, I tried it on the Dow years ago, but the S&P, and just remember the S&P is much cheaper to trade than the Dow in terms of the number. So I traded it. I've been doing this a long time. I traded at £5 a point. That's all. So this week I've made 200 quid, and it's Tuesday lunchtime. Paul, by all means, you can do that. And many people have tried that. In other words, when the market is falling, you stop. But I take them all. Okay, I take them all. By all means, you can stop that. If the primary wave is falling, then don't take them. Many people say that helps if the primary wave is falling. This market's going really strong now. This is one of the days you say to yourself, I should have stayed in this. And if we have a look now at there is market traded another outside bar, as you can see, beautiful outside bar, went up a bit and then came back into the American Open. This is much stronger than I anticipated. I anticipated it pulling back here, and that hasn't happened yet. So this is a very strong market, folks. We're going to see a very strong day, and I'm hoping a very strong run into Christmas. Does that present problems? Well, it probably means that some of the strongest shares won't pull back to the last old high, which means if that's the case, then you can consider breakout trades. Remember, if a share doesn't pull back, that's a sweet spot. Just there. That's a sweet spot just there. You see how it pulled back? There's another sweet spot. Sweet spots are absolutely magnificent for trade entries because they get you in with virtually no risk at all. So Mark, then you can load up. That's a sweet spot just there. That level, that last old high. And that's where the orders were at the open, just there. Okay, so you buy it? Yeah, it couldn't be simpler, Manish. I'm going to have about 1 million emails on it because it's just so simple. David says, how do you find a sweet spot? Sweet spot's just to pull back to the last high. That's a sweet spot. Yeah, just there, David. So, I've had 5 or 6 in a row that's gone against me, Keith. Yeah, 5 or 6 in a row, easy, that's gone against me. But the market tends to open up very close to yesterday's close. So the losses are not great, but when it moves up, it tends to gap up very nicely indeed. So try it. It's not for everybody. It's quite scary when you do it to start with, but it's a very profitable edge in the S&P 500. Sort of buying the close and closing it out at the next open. Okay, and I'm quite sure that if you start to do battle with the S&P 500 intraday, that you won't make as much money as you would by doing that. Okay, because it's simple, it's binary, it's yes or no. My son says that he doesn't like to hold it over the week. He doesn't like to take one on Friday. That's what he says. Okay. He's been training it for years. The first thing I taught him to do. Keith, just try it for a while. Folks, try it with a demo account or something for a while. It's very simple, not much to it. Okay. So I think that over the next day or two, do your best to try and formulate some form of trading plan. I think that although it may not seem obvious, but your number one objective should be, in my humble opinion, to build the discipline to follow a simple set of rules over and over and over again, to get past the temptation to jump from one system to another system to another system. And there's no easy way to do that. You just got to grit your teeth and do it. So choose a system that's fairly mechanical and resolve to follow that system for at least 15 trades before you actually change the rules. After the 15 trades, if you've followed the rules, then by all means change them to something that makes a little bit more intuitive sense to you. Okay. Anyway, it's been great fun doing the course. I hope you've enjoyed it. I've kept you far, far too long again. Maybe I put far, far too much material into the course, and it would have been better to have done less. I don't know. Don't overlook the Midas Touch, folks, as a watch list. The Midas Touch watch list as a watch list for finding strongly trending shares that are very, very suitable for swing trades. Just remember the Midas Touch, that is a watch list. You've still got to find quality entry points into it. Okay, guys, I'm going to sign off. You know where I am. Okay, so if I can help you in any way, you know where I am. I look forward to hearing from you. I'm going to do a video now, probably on the gold market. I'll put that up on YouTube in a second, and then I'll do my best to keep that running. Thank you very much, folks. It's a great pleasure and honor to chat to you. I can chat about markets, as you know, for days on end. I hope that I haven't put too much into the course. It's quite simple. Pullbacks to the last old high. If they don't work, then it invariably goes back and it gives you a spring, the sort of thing that we're seeing on GB Group at the moment. So just remember that you're not going to get rich quick, but you want to develop the ability to be consistently compound an account. And as I say, I upsize my positions on a monthly basis. So if I've made, start with 20,000 and I've made 3,000 in the month, then I've now got 23,000 in the account. That means that 1% is not £200 anymore, it's £230. And that means that I can buy more shares. All right. So slowly but surely grow the account surreptitiously. Folks, the Manchester user group is tonight, and I have a seminar now to do for Simon Campbell on worry-free investing. And that's another thing, folks. For the bulk of your investments, don't forget about worry-free. It's a really good way and hands-off way to actually build wealth over the years. So put most of your wealth into worry-free. Susan Thornborough's version of it, or the official version of it, I really doesn't make much difference. And then with a small amount of money, and everybody's definition of a small amount of money is different. If you're a youngster and you've only got a small amount of money, chill, because all the old people would give you their money to be your age again. They may say, I wouldn't want to go through that old shit again, but they're lying. Everybody, if they could change places, they would. Okay, so just remember that time and lots of time to go to build wealth has got an intrinsic value all of its own. So don't worry if you've got a small account. There are spread bettors around where you can trade from 1 penny a point, I believe. So lots and lots of ways of growing a small account these days. Thank you, Keith. That's for sure, Mark. That's for sure. Compounding is just so difficult to get your mind around when it goes. I use swing trading on both. In the American market, David, I'm only using spread betting for my swing trading, and that's largely because it keeps the tax simple. I've got a simple mind, so I don't even have to speak about it to HMRC. Thanks, John. Okay, so folks, I need to run to Simon Campbell now. Take care of yourselves. Just spend a month. Those of you that want to trade that simple system I spoke about at the end, spend your month trying to get your mind around it. You can try and optimize it as best you can. I haven't found that useful. You could decide not to buy the market if the primary wave is down. That might help. That might help. Take care of yourselves, guys. I got to run. Bye-bye now.